Please welcome David Goone from tZERO, who will share his unique perspective on the future of tokenized assets and their integration into traditional finance.
My name's David Goone. I'm the CEO of tZERO. I came into this tokenization, digitalization, blockchain world from traditional finance. I was one of the original management team of a company called Intercontinental Exchange, which basically at the start of around 2000 started rolling up traditional exchanges. The one most people know is we had acquired the New York Stock Exchange in 2013, but prior to that, we rolled up a bunch of what I would call, we used to call open outcry exchanges, where people screamed and yelled in the pit. And basically the model was to digitize them and open them up to the masses, where it was easier to go onto your computer and trade with them, both institutional, for the institutional and the individual. We also did the same with the data that was generated from all the exchanges, and then grew the business from there. So why I bring that up is that it's interesting to see we're in a similar situation. And I would say it's similar probably now to where we were in the late 80s, when everyone thought everything would go onto computers for trading. But it took probably an extra 15 to 20 years before we started to realize that happening. Now things move now more logarithmically, but in general, I think the state of digital assets and tokenization is just at the beginning, just really at the very beginning of what I would call acceptance. The good news, I think, for the industry is that while at times, especially as real world assets are getting tokenized and digitized, it seems like slow going. Eventually what happens is we hit an area where it becomes, the hockey stick, where all of a sudden it just takes off and moves. And that's kind of, I think where we're at right now is still in the early beginnings of where we are. It's a interesting period, because the way I see it evolving is probably not how the crypto industry thought it would evolve. Originally, I think everyone, the original concept is most everyone knows, was as an alternative currency, an alternative payment system. And right now, where you see a active and becoming more active cryptocurrency market, where people are trading it mainly for some type of price appreciation. At least that's in my view. And I think if you ask most people, they would say they're buying crypto for appreciation. They're holding it more of an investment than they are holding it to buy a cup of coffee. And I think that's okay. I think that's the beginnings, and what we're seeing is really interesting. People like the previous speaker looking at ways to use blockchain for what it was more really intended for. We do see some interesting blockchain applications where people are trying to, trace food from where, using blockchain to know where your food supply comes from, all the way from, farm in another country to, the person, to table, basically. And you can track the history of the food or supply chain issues of blockchain. Those are interesting applications. Those aren't necessarily what I would call trading applications. So on one end, you have some very functional applications of blockchain starting to be utilized. And on the other end of the spectrum, you have, for lack of a better word, speculation of cryptocurrency. And I think you're going to start seeing those two. If you look at those twos as ends of the spectrum, you're going to start seeing things work towards the middle, and that's where I think the industry is now. The issues I think facing the industry, I think to make it successful is, and what we're doing at tZERO is to start taking some real world assets and tokenizing them, using them as ways that we can start seeing people trade value of those assets, not just pure speculation, but thinking of them as tokenizing or fractionalizing to have access to assets that other people have that they might not be able to afford for some type of, let's say, investment purpose. So what we do is we sit in the United States. We're a fully regulated broker-dealer that can do digital assets. We just got in the last months and just went active with our special purpose broker-dealer, which can custody a digital asset. So what we look to do is take assets that you can use for a primary raise, so you can raise capital, and then trade on a secondary market and custody those digital assets all within one ecosystem. And that's the concept that we are dealing with. So what is type of assets do we see people have interest in? So as opposed to maybe the previous speaker, which is really trying to marry the two and cause real functional use, I think, of the blockchain, as well as trying to get people to invest and trade those. We're looking more on the investment. So let's take an example. If we had a real estate investment where typically a accredited investor or somebody with a lot of wealth or some type of wealth would spend $100,000-$250,000 on various real estate investments, or a private equity investment where you're putting in $250,000 or $500,000. We think we can democratize that by tokenizing that asset. Now, there's several ways to do it, but you can tokenize that asset so it becomes available to a lot more people. If you look at, so let's say you can sell it in $50 increments, or $250 or $500, depending on what the issuer would like to do. Or what we see people doing is taking a portion of an asset, trying to do that. So if I can give you an example, let's say you had an asset that you went to your traditional ways and you raised, maybe several $1 million with your larger investors. You can take the remaining portion and tokenize it to the masses, or to the digital world. We see interest in that. We also see ways that people are looking for to invest products they just won't get a look at. So if you read the various ways people are looking to invest right now, most people invest in what they know, right? You look at, I always use this example. If you would have told me, and I've been in the markets a long time, if you would have told me 20 years ago or 30 years ago that people would be investing in gym shoes as an investment, that people would buy, certain types of gym shoes for appreciation, I actually think I would have laughed you out of my office at the time. But now that is, there are very successful websites and very successful people who buy gym shoes, it's because what people knew. I mean, people are investing in lots of things that they're comfortable with, not just equities. So what we're starting to see, one aspect of the business is people want to invest in things that they're comfortable with or may have some knowledge in doing it. So we do see some things that people are looking to tokenize and projects on our table in the sports, arts, and entertainment area. So those types of things you can fractionalize. So you can fractionalize athletes' earnings, or tokenize athletes' earnings, and people can invest in those things. I mean, some of the major you can tokenize teams, sports teams, and we're starting to see that type of thing already happening. You can tokenize interest in films, and you can tokenize interest in music in a variety of ways, you know, for revenue streams from interest earned in music. So all these things, I think, you know, can and will start seeing interest in the blockchain. You know, we will see interest in blockchain. There are other parts of that that become interesting. So there's two things you can do. You can buy an asset and it can be very illiquid. And when it gets very illiquid, what happens is, you know, I buy an asset and I wait, you know, pick a period of time, 4 or 5 years, and then hopefully the asset is sold, whether it be, you know, a building would be a typical one. You invest in a private equity in a building, you know, the hold period is going to be approximately 5 years, and you don't expect any exit. You're stuck in that investment for 5 years. So hopefully that investment pays out and you know, get out of it. Now, along the way, a lot of things can happen, right? So, and let's take the building example. Interest rates go way down. The value of the building goes way up, let's say into year 2, but you can't do anything about that to monetize your, you know, take some money off the table or monetize your investment. You have to rely on the judgment of the general partner if they want to sell the building or for whatever reason are going to hold it, which typically happens till the 5 years and sell it. Now, if in year 4, all of a sudden there's huge inflation, interest rates go way up, the value of the building at time of sale may become very difficult. So many things happen. And those who have done this, either it gets extended where they don't sell it at 5 years, or they sell it and, you know, hopefully you make some money. You may have lost any of the appreciation that would have happened in year 3, and you get your principal back. What's great about tokenization and trading is that you're able to offset your, you may be able to take that profit in year 3 or take certain money off the table. And that's really where I think the next phase of the market goes. We're going to be taking some real world assets. So we have the crypto world that's very actively trading. And I think the regulation is going with the new administration. It appears, and certainly the market believes, that there's going to be a lot more clear rules and a more friendly regulatory environment. At least that's what the market's telling you in the US. And there's going to be a lot easier trading there. I think the next step is to start tokenizing some real world investable assets that can be actively traded in the secondary market. I think that's kind of the next phase. I think on the other end of the spectrum, you're going to see things like, and I think that's just going what, you know, the previous speaker, Matt, was talking about, is you're going to start seeing more functional uses of blockchain, but that's going on. A lot of the technology is already there. A lot of the use cases people are going to get used, are starting to work out. And you're going to start seeing a lot more functional use of the blockchain. There's just too much money that's been put in there that that's not going to continue on. So, as time goes on, and probably over the next 10 years, we're going to see the two kind of converge, those areas converge where you're going to be full trading, across the whole spectrum. So we're concentrating on the area where we see real opportunity, where you can take economic interests in real world assets and provide investable opportunity for the institutions and individuals. So our ecosystem is set up now well. We were the second person to get a special purpose broker dealer that can house the digital asset. So the big thing is you have to make it easy for the user. They have to be able to buy the asset. There has to be a good likelihood, like any asset, that there is an investment thesis that you can make money in the asset. You should be able to, I think the key with tokenization is you should also be able to trade out of the asset and then easily custody the asset, obviously, in the digital space, and that the regulatory environment is clear. I think this coming year, you're going to see a lot more of that. So, for example, I think there's a big opportunity out there in a lot of the private equity investments. I myself invest a lot in private equity, but it's a very illiquid investment. What if we could take the economic interest of a private equity investment and provide it to the masses? I think you're going to see a lot of interest in that type of product. And think of the things that private equities invest in the alternative asset classes. There's real estate. We talked about it. There's a lot of private assets going into sports franchises, athletes, entertainment, all these things that can be made to the average individual that they understand and institutions can understand. I also think you're going to see it in the world of other things like art. I mean, it's that those types of things are already starting, and you're starting to see them get tokenized and trade. I think in the U.S., as the rules become more clear, it'll become much easier. I also think that we have to provide ways for people who are holding crypto assets to invest in these types of assets. Now, those things can be done in a variety of ways, both in the U.S. and outside of the U.S. But we think the appetite is very big, and we're working hard on bringing those types of assets to the marketplace. So I think the future's bright. I think everyone has to be a little patient. We're in early innings. But look, we have our own digital asset, our tZERO Ps, which trade actively. And in the secondary market, which is really the holy grail for a lot of these things to get them to trade actively, that gets people more comfortable. Everyone wants to be able to get into something, but also get out. We're trading probably 30 to 50,000 shares of digital assets on the blockchain. Right now we go carbon copy, but we're going fully digital in 2025. Now we have our special purpose broker dealer, but we're trading 30 to 50,000 shares, a week. We've traded probably, 45 to 50 million. So there is a market out there. There is an appetite. I think the goal of the industry is to bring investable tokenized assets. I mean, that's at least our goal, that the investor can have a realistic chance of making good money and a realistic chance of being able to get in and out of the asset. And I think, like I said, we're working on that end of the spectrum. We also see, one last thing we're seeing, which I think will be talked about a little more by one of my colleagues later on, is a lot of interest in what is definitely a security, is, when you have interest-bearing tokenized assets. And we see a big demand, especially in the last several months since we got our special purpose broker deal. Many people have reached out to us because particularly in the US, that is almost certainly a security where you're going to have some interest-bearing parts of the crypto ecosystem that can be tokenized and people can earn interest. And I think that will enhance the entire crypto trading marketplace as well, when people can start doing, for lack of a better word, payments where you're also earning interest on your token, for lack of a better word, within that that ecosystem. So as I look at it, I'm running out of time. I thought that's a good summary of where we see the industry going. We're really excited about it. And since we've gotten our special purpose broker dealer, there's probably been, several dozen conversations of really interesting assets that people want to bring to the marketplace, and we think we can provide the infrastructure and the platform for them to do it. So with that, I'll turn it back to you to keep you on your schedule, Augustine, and thank you.